most of you will ask, what's the meaning of CREATE? So CREATE is a corporate recovery and tax incentives for Enterprise Act bill. So the objective of CREATE, or the aim of CREATE, is really to support the recovery of businesses and enterprises that's been affected by the pandemic. It's also to enhance the ability of our country and our industry to attract investors, and at the same time to be competitive with the other countries. So in today's, we invited prestigious and distinguished guests and panelists who are really the experts to talk about this topic. But before giving the floor to our moderator, I would like to acknowledge all our members who are here today, as well as our partners, government representatives from DTI, DTI EMB, DICT, Quezon City ICT Councils, and other NICP. We also have the PTIC from LA and Honolulu, and of course the British Chamber of Commerce and the American Chambers of Commerce. Okay, so to officially open our session, it is my pleasure to introduce to you a lady who is very motivated, very active and committed, very hardworking individual, and with bubbly personality. She is the Associate Director of Optum Healthcare, and she's an active member of LegCom. She is also in charge in the external affairs and external communications of Optum, as well as in charge on compliance. Without further ado, I would like to introduce to you a very good friend of mine, Miss Jenny Marshall. Jenny?
Hi, everyone. Good afternoon. Thank you so much for joining us today. Miss Judy was beginning to think you were introducing another moderator.
And I'm proud to say that Jenny, together with Attorney Lynn, was the one who provided this topic for today's session. So thank you, Jenny and Attorney Lynn.
You're very welcome, Miss Judy. So it has always been my advocacy to help enable our industry associations. And just waiver, I'm not the one in charge of compliance in Optum. Okay, so very exciting topic for today. So just as an update, CREATE. We've actually been hoping to have CREATE as a topic for a few months already, no? But it's since it was a few months ago, it was still undergoing revisions, deliberations, numerous discussions both in the lower house and in the Senate. So this is actually the perfect time to discuss it, since I think that was only a couple of days ago, right? 2 days ago, it was just approved by the members of the bicameral conference committee. So this is hot off the oven, so to speak. Very fresh. The signatures are still very fresh on the BICAM approved version. It's already been referred to the office of the president, so we can expect it to be enacted, signed into law any day now. So, without further ado, ladies and gentlemen, I'd like to introduce to you our very distinguished speaker for today. He is definitely an expert, recognized across different industries. He has 24 years, of professional experience in providing Philippine tax services. He is the incumbent co-chairman of the Financial Services and Taxes and Tariffs Committee of the American Chamber of Commerce of the Philippines. He is also the business tax services leader of SGV and Ernst & Young ASEAN, expert in corporate taxation as well as estate taxation. He also heads the Private Tax Services Family Business Succession and Estate Planning Group of SGV, Ernst & Young Manila, and deals with high net worth of individuals. He is, of course, a regular face in all of the congressional hearings. He's constantly consulted by our policymakers when it comes to taxation. Ladies and gentlemen, it is my pleasure to introduce Attorney Jules Riego, Principal of Business Tax Services of SGV and Company, a member of practice of Ernst & Young Global. Jules?
Thank you, Jenny, for that very kind introduction. Good afternoon, everyone, and I hope you are all well and safe while enjoying the comforts of your home or office. First of all, I would like to thank the Healthcare Information Management Association of the Philippines, HIMAP, and its leadership for inviting me to speak before you on such a very pressing and very important topic. So thank you, Ms. Bachi De Leon, Ms. Jenny Marshall, Ms. Judy Weisenhunt, for organizing this and inviting me. Okay. Just a few preliminaries before I begin. Please note that as Jenny said earlier, the Bicameral Conference Committee only approved this last February 3 or 2 days ago. So and note that the create bill is about 200 pages, and there were a lot of changes introduced by the BICAM. So honestly, I'm still trying to grapple with the far-reaching implications of this bill, and obviously 2 days are not enough for me to process and analyze the implications of this bill. So that's why when I got the invitation from Bachi last January 22, I actually suggested to give it at least 2 more weeks. So before we have this webinar, so that we can wait for the BICAM version to really come out and study. Okay. So what I'm going to discuss this afternoon is actually a comparison of the Senate version that was approved on third reading last November 2020, and that was my original intent and my materials, but I thought that I might just confuse you if once the BICAM version comes out, and and you will hear something different from me. So anyway, so what I'll do this afternoon, I will just try really my best to present this in a way that all of you will be able to understand it. And for those who have already read it, the BICAM version, I very much welcome a contrary opinion as regards its implication or interpretation. So, and another thing, let me emphasize at this point that what I'm going to present is the comparison between the salient points of the Senate version and the BICAM version. So, and the reason why I would like to do that is to provide more context to the discussion. And I think it will benefit you as regards some of the thought processes that went into this BICAM version. So lastly, I would like to clarify that I will just be focusing on the incentives portion of a create bill, okay? Because your organization pointed out to me that that is the part that is more relevant to you, okay? So we can start, okay? So this is Corporate Recovery and Tax Incentives for Enterprises Act. Okay, next slide, please. So before it became create, actually it was called Fiscal Rationalization Incentives Bill when I started working on the progress of this bill. And believe it or not, it started more than 15 years ago. So it has been pending in Congress for over a decade already, almost 2 decades. Okay. And I was already meeting with Jenny Marshall then. We were regularly attending congressional hearings. Okay. And the first bill under the Duterte administration actually was filed way back 2016. Okay. And that is the big difference why this is already it was able to reach this status at this point, because the Duterte administration had a very good head start in tackling the fiscal rationalization incentives bill. Whereas in the previous administrations, they would file this bill about towards the middle of their administration or towards the latter end. So that's why the status quo got maintained for a long time. But the third administration was very wise, filed the bill right off the start of their administration. So it became train to about 2018. It became trabajo tax reform for attracting better and higher quality opportunities bill. Then it became Sitira towards third quarter of 2019. Corporate income tax and incentives rationalization, and then it became create. Okay, DOF submitted the proposed amendments in line with COVID-19 way back May last year. Okay, and then by November 26, because of the marathon hearings done by the Senate, okay, they were able to approve it on third reading way last November. Okay, and I was very hopeful already by December that it will be signed by the president. And in fact, you probably read it in the news. Congressman Salceda said that they're not going to introduce any amendments anymore. They will just adopt the Senate version. And then lo and behold, they said, we'll still convene the BICAM and introduce some more amendments. Okay, so that's why this, I would say, is already long delayed. My fear is, okay, even during the time of ECQ last year, okay, I think uh, decisions were already being made by a lot of foreign investors. Okay, they're not going to wait until this COVID-19 goes away before they start planning and rethinking their supply chain and other plans. Decisions were already being made last year. um I am just hoping that it's not too late for us, and decisions are still being made at this point. But how much decisions were already made last year, that's a big question. I hope we are not too late. Okay, next slide, please. All right, so the main portions of create bill is on the adjustment of the corporate income tax, the regular corporate income tax and other taxes, and of course the rationalization of fiscal incentives. Okay, next slide, please. So these are the proposed amendments. Okay, so next slide. So currently, we have 14 investment promotion agencies or IPAs, okay? And one of the reasons behind this create is to codify all of the investment laws in the Philippines, because our foreign direct investors are having a hard time, okay, understanding our complicated investment laws. And there are, as I've said, 14 IPAs that are battling against each other in attracting investment. So as just to avoid that and help investors just read one law, okay, to avoid complication, let's codify it and rationalize it already. And the other thinking behind it is because the government feels that there are redundant incentives, incentives that are not needed, incentives that are will not matter about attracting foreign investments and resulting to tax leakages. So let's look at our incentive package and redesign them. Okay, next slide, please. Okay, so one of the big changes brought about by Create, if you look at the Senate version, okay, the proposal was to allow um, the approval or the granting of the tax incentives with a prescribed threshold. Okay, so it will not be the 14 investment promotion agencies who will always approve the applications. So the rule will be any capital investment or investment capital that will reach the threshold of 1 billion of more than 1 billion would have to be approved by the Fiscal Incentives Review Board or FIRB. Okay, anything that is 1 billion and below, okay, will have to be approved by the 14 investment promotion agencies. That's the proposal of the Senate. And then when the BICAM was convened, there was an idea or a proposal that was put forward to increase the threshold to 3 billion. And the thinking behind it is so as to avoid too much bureaucracy. Okay. In fact, the Joint Foreign Chambers was proposing to increase the threshold to $500 million. If you hear what SAFE is saying, or the Semiconductors Association of the Philippines, to them, 1 billion or $20 million is peanuts. Okay, when they invest, so they're afraid that there will be an additional layer of approval. So increase it. But when the BICAM version came out, the Senate proposal was retained. Okay, so it stays at 1 billion. Anything from 1 billion and below will just be approved by the investment promotion agencies, and anything above that will have to be approved by the FIRB. Okay. Note that in determining the capital investment, the value of the land and working capital are excluded. So the 1 billion should be net, okay, of the cost of the land, if land will be involved, and the working capital. So meaning what you can consider in determining the 1 billion is, of course, building, equipment, and other expenses other than the land and working capital. Okay. Next slide, please. Okay. Before that, one good question. Can FIRB actually require a specific a threshold for a specific industry? Okay. Okay. Or let's say a minimum investment capital for a specific industry. My opinion is it's not. They don't have that power, because what I have seen in their power is just to prescribe performance metrics. Okay, so that's a good news. So it stays at 1 billion, but there's a provision that the FIRB can actually increase the 1 billion threshold. So that's a good provision. Okay. Okay, so as I've said, provided in the definition of investment capital, excluding the value of the land, except, okay, if you are a registered real estate developer. Okay, so for example, if you will develop an eco zone, of course, the value of the land would have to be included in the computation of the 1 billion required investment capital to determine whether it should have to be approved by the FIRB or by just the investment promotion agency. Okay, next slide, please. All right. I think it's important to still flash the definition of export enterprise, because a lot of deliberations were done whether the threshold for you to be able to register as an RBE, or a registered business enterprise, to qualify for investment was raised previously to 90%. Okay, so just to be clear, it stays at 70%. Okay, and the good news about it is it's now explicit that both direct exporter and indirect exporters can actually register. Okay, become an RBE, or registered business enterprise. So indirect exporters of goods and services are qualified to register under CREATE. Okay, so that was adopted by the BICAM as well. Okay, next slide, please. All right. Definition of less developed areas, because at the Senate, in the Senate version, there's a definition of less developed areas, and it plays a very important role in determining the length of your incentives, the length of years that you will be able to enjoy the incentives. That definition, or that criteria, was removed by the BICAM. Okay, the current version of the BICAM that will be signed by the president. Okay, so there's no less developed areas anymore. I think it improved the Senate version in that sense, because if you look at the definition of the less developed areas, these are actually low per capita. There's hardly any infrastructure. So even Rufus Rodriguez was asking before, who's going to invest and locate in less developed areas, no matter if you give them 30 years of ITH, why would you locate in less developed areas where there's no infrastructure, there's no internet? So how can they attract investment? So right now, there's no meaning by deleting that phrase. There is no requirement that you have to locate in a less developed areas to get the maximum number of years that you can enjoy your incentives. Okay. All right. So I said it's much simpler now. Next slide, please. All right. I will just emphasize that this is the Senate version. Okay. So Senate version, in summary, those who will be able to register under CREATE are export enterprises who are exporting at least 70% of their output, both direct and indirect exporters. Okay. And now, introduced by CREATE, even domestic enterprises. So meaning those who will cater to the Philippine market. They don't have to be exporters, or if they cannot meet the 70% threshold, they will still be considered as domestic market enterprise. Okay. And they are, under the Senate version, they are classified as either strategic industries or non-strategic industries. If we look at the BICAM version now, okay, next slide please. Okay, basically the same except, okay, the BICAM version, okay, basically the same except that the BICAM version now did away with the definition of strategic industries. Now they are making at least three classification, or at least two classification and one sub-classification. Now it's called critical industries, non-critical domestic industries, non-critical domestic industries, but will have 500 million of capital investment. Okay, and please remember these three categories for domestic enterprises because it's going to play a part in determining the kind of incentives that they will get. Okay, next slide, please. Okay, so under the Senate version, who will define strategic industries? It will be defined by the SIPP. What's going to be considered as strategic industries? But who formulates the SIPP? Okay, and this is an important point. It's going to be the BOI in coordination with the FIRB. Okay, but under the BICAM version, who will determine the critical industries? It's going to be NEDA. Okay, so it refers to those industries belonging to and identified by NEDA to be crucial to national development. Okay, in my opinion, this is a good improvement. This is a good amendment. Why? Because I think the determination of which industries should be prioritized is largely a function of the National Economic Development Authority. Why? Because they have a view of the macro level of the country. Okay, in terms of which industries to be prioritized, so that we have a coordinated approach in towards economic development, unlike BOI or in coordination with the FIRB. So they have a better view of things, how to make things work together. So I think this is a good amendment. Okay. All right. So how the incentives will play? If you look at the Senate version is saying the income tax holiday will be followed by the 5% special corporate income tax, or SCIT, or followed by enhanced deduction, or ED. Okay. And if you look at the Senate version, the option, okay, to go directly to enhanced deduction is an option of the export enterprise or the domestic market enterprise. Okay, that's classified as belonging to strategic industries. If you look now at the BICAM version, there is a difference. Okay, because the BICAM version is saying now that you can only have you will have to follow this order: ITH, and then followed by 5% SCIT, or the ITH will be followed by the enhanced deduction. Okay. The other difference is the only enterprises that will be entitled to the 5% SCIT are export enterprise, domestic market enterprise, okay, or DME with capital of at least 500 million, and critical DMEs. Those three. Okay. So meaning, okay, next slide please. And the implication is for non-critical domestic enterprises with investment capital of 500 million, they will be entitled to 4 to 7 years of ITH and enhanced deduction, or opt for special corporate income tax of 5 years. Okay. So for non-critical DME. So remember in the previous slide, if you are a critical DME, you're entitled to SCIT, but that's longer, 10 years. I'll explain later. If you're non-critical DME and your investment is at least 500 billion, you're still entitled to 5% SCIT, but it will only be for 5 years. Okay. For non-critical DMEs with less than 500, definitely you will not have the option to have SCIT. Okay. So your incentive will only be ITH 4 to 7 years, okay, plus enhanced deduction of 5 years. You don't have any option to go into SCIT. So that's the difference from the Senate version. Okay. With respect to special corporate income tax, Senate version, regarding the allocation of that 5%, okay, the Senate version is simpler because the 5% will just have to be allocated 3% to the national government and 2% to the LGU. Okay. The proposal of the BICAM was really a bit more complicated because the 2% will have to be given to the treasurer or treasurer's office of the province, so on and so forth. So I think the Senate panel of the BICAM prevailed and said, let's make things simpler. Okay, let's just simplify things. Let's retain that Senate version. 3% to the national government, 2% to the LGU. Let's not make it difficult to the investors anymore. Okay, so that's retained. Okay, next slide, please. Okay, with respect to enhanced deductions, okay, these are the list comprising the enhanced deductions under the Senate version and the BICAM version. Okay, simple for the Senate version: depreciation allowance, so on and so forth, domestic import purchase, 150% of the deduction. The BICAM version is, again, a bit more complicated. Although they are proposing a fixed lower rate of 20% corporate income tax. Okay. Except that the allocation of the 20% is a bit more complicated. 60% to the national government, 40% to the LGU, and then that 40% will be further broken down to sub recipients, no? So just to simplify things, let's just retain the Senate version, okay? So meaning if you are under enhanced deduction after, let's say, ITH, after SCIT, if you're entitled to SCIT, or you will opt for an enhanced deduction, okay, the enhanced deduction will be subject to either 25% or 20% regular corporate income tax. Why the two rates, no? Because if you look at the first portion of CREATE, there is a proposal to of course reduce the corporate income tax to 25%. But for SMEs, okay, or companies with taxable income of not more than 5 million and with total assets of not more than 100 million, okay, those two conditions must be met. The corporate income tax is only 20%. Okay, so that's why it's possible that if you are under enhanced deduction, you will be entitled to the 20% SCIT, 20% regular corporate income tax. Okay, next slide, please. Okay, so these are, we'll just go into the details of the enhanced deduction. So depreciation allowance, if you will be under enhanced deduction, meaning regular corporate income tax of 25 or 20%, but please note that depreciation allowance is only limited to assets that are directly related to the production of goods and services and excluding those related to administrative and support services. So you kind of have to make, I think you kind of have to make an allocation based on area. Okay, because if the entire building is majority, the bulk of it is being devoted to production, but of course there are administrative offices inside, you will have to allocate that area, meaning you cannot be entitled to the additional depreciation allowance of 10% for buildings and 20% for machineries and equipment with respect to those assets that are devoted to administrative and support services. Okay, only those that are directly related to the production of your registered activity. Okay, so I hope that's clear. Okay, question. What about if the machinery, equipment, or facility is actually being shared? Okay, uh, I okay. It's a good question. So I think you can allocate because you can allocate because there is no requirement that the machinery, equipment, or leasehold improvement must be devoted exclusively to the production of your registered activity. It just says it has to be uh, directly related to production, but what if it's not, it's partly directly related, right? So I think you're entitled to allocation. Okay, direct labor expense, next slide please. 150% deduction. Okay, so meaning, let's say if you have 100 million worth of direct labor expense, it will become 150. Okay, so but it should not include salaries, wages, benefits, and other personal costs for managerial, administrative, indirect labor, and support services. Okay, simple to understand. R&D cost, okay, 200%. Again, if you have, let's say, 10 million of R&D cost or 50 million of under R&D cost, then it becomes times 2, okay? But we have to keep in mind that it is limited to local expenditure incurred for salaries of Filipino employees and consumables, okay? Or if you are outsourcing your R&D, only R&D costs that's paid to local research and development. Okay, so that's going to enjoy the 200% deduction. Okay, next slide please. Training expense, okay, 200% as well. Provided that it shall only apply to trainings as approved by the IPAs based on the SIPP and on the condition that they are given to Filipino employees engaged directly in the RBS production of goods and services or registered activity. Okay, so only the cost of training expense given to Filipino employees, and that training must be approved by the IPA. Okay, we were opposing the prior approval of the IPA as a requirement because I mean, who's in the best position, what trainings are needed by your personnel, right? But it was retained. Okay, next slide please. Domestic input expense, so 150% of the cost of your domestic input expense. What's this? This is limited to those that are directly related to and actually used in the registered export project or activity, meaning whatever your local purchases that you have, okay, can enjoy 150% deduction, but of course it has to be local. Okay, so just to patronize our local products, and they must be directly related to and actually used in the registered activity. Next slide, please. Power expense. So the rationale behind it, 150% deduction, is to, of course, to have an indirect subsidy on the power expense, given that the Philippines has actually has the highest cost of power in the entire Asia. Okay, Asia Pacific. So just to compensate for that, let's allow 150% deduction of the power expense. Okay. All right. Reinvestment allowance to manufacturing industry, and this is only peculiar to the manufacturing industry. Okay. What's this? So if there are undistributed profits and they are actually flowed back to the business, okay, and they are reinvested in any of the projects or activities listed in the SIPP, then 50% of that reinvested profit can be claimed as a deduction within 5 years from the time of reinvestment. Okay, so that's one of the enhanced deduction. Next slide, please. NOLCO, okay. It was still maintained in the BICAM version, in the Senate version, in the BICAM version, but it's already in Bayanihan Act, right? Extending NOLCO from 3 years to 5 years, okay? Of course, if you are under enhanced deduction, you cannot enjoy the SCIT, and you will not have these benefits, of course, under ITH, right? So you kind of have to make a computation whether you will opt for the 5%, okay, or you will opt for the enhanced deduction, okay. Um, I will just make an important note on that when you make that decision, because please remember that if you are under SCIT, okay, then there's less opportunity for you to have to deal with the local government units, because the SCIT, or the special corporate income tax, is in lieu of all taxes, okay, whereas enhanced deduction will be under regular corporate income tax, meaning you will still pay real property tax, you will still pay local business tax, you will have better deductions, okay, but that's one factor that you need to consider, having to deal with the LGUs, okay. On the customs incentives, okay, an RBE to be able to enjoy customs duty exemption for capital equipment, importation of raw materials, spare parts, and accessories, it has to be directly and exclusively used in the registered activity. It must be part of the direct cost. And those capital equipment, raw mats, spare parts should not be produced or manufactured domestically in sufficient quantity or of comparable quality. Okay, there must be an prior approval by the IPA before importation is done. Okay, and if those equipments, raw mats, spare parts, accessories will be partly used, okay, in non-registered activities, okay, it has to have the prior approval of the concerned IPA. Okay, of course, you need to pay a proportionate portion of the duties and taxes on those imported items. Okay, so that's the condition. Allowed, but there's prior approval by the IPA and payment of duties and taxes proportionate to the use of proportionate to the partial utilization. Okay, next slide, please. Okay, the BICAM version affirmed the Senate version regarding disposition of equipments. Okay, but the sale or transfer is only allowed for those who are availing of customs duty exemption, or for those who are not availing of the duty exemption, if they are for exportation, if it's on the ground of proven technical obsolescence, or the technology is already obsolete, the machine is already obsolete, okay, or if you will donate it to TESDA, state universities or colleges. But under number 5, if you will donate it to TESDA or state universities or colleges accredited by DepEd and CHED, that's going to be exempt, okay, from donors tax. Without prior approval from the IPA, okay. And it has to be with prior approval from the IPA, okay. But if you will make the disposition after 5 years, there's no prior approval needed, but you have to still give prior notice, just prior notice to the IPA. And of course, there has to be payment of duties and taxes at that time, okay, based on the net book value. All right. On VAT exemption, okay. Senate version, something that is significant there that you have to remember. Senate was proposing that only RBEs that are located inside an eco zone or free port zone will enjoy exemption from VAT on importation and local purchases of goods and service. Okay. The good news is, under the VICAM version, the current version, that requirement to be located inside the zone was removed, meaning there is no distinction anymore between RBEs located inside the zone or free port zone and those who are outside. The importation of both entities, whether you are located inside the zone or you're outside the zone, your importation will still be VAT exempt. Your local purchases will still be VAT exempt. provided that those importation and local purchases are directly and exclusively used in the registered activity. Okay, so what's the implication? The implication, I think, is this. Okay, if of course your importation or your local purchases of goods and service are not directly and not exclusively used in the registered activity, then it will be subject to VAT. Example, if you're going to be audited by SGB, that's not directly related to your registered activity. So now we have to pass VAT on to our service, whether we we render the service to a PEZA registered enterprise or to those who will locate outside the PEZA zone. It doesn't matter anymore because our services are not related to the registered activity. So let's say security services, security guard, managerial services, cleaning services, not directly related to the registered activity. So that will be passed on to the entity, whether inside the zone or outside the zone. So what I think it's going to happen, this is an irritation in that sense because the VAT passed on will just accumulate over time. Okay. Question is, can you have it refunded? Okay. Uh, because you are engaged in zero rated sale, let's say export, because you're engaged in export, I have my doubts because only input VATs that are attributable to export sales or zero rated sales can be refunded. Okay. So if you go to court, even if you go to court and say and file your claim for refund, I have seen cases where the court's decision is this: they are not supposed to have passed on the VAT to you because that's attributable to your zero rated sales. So under create, they are not supposed to pass on VAT to you if those purchases are directly related to your registered activity. Okay. So for those input taxes that were passed on to you because they are not directly related to your registered activity, okay, you cannot claim that it's attributable to zero rated sales. So it's a question now whether that can be refunded or not. And I think my position looks like cannot be refunded. I hope that it will be cured and we will be able to convince the Bureau of Internal Revenue to allow the refund, because it's really just going to accumulate, or it would have to be claimed as an expense. But would you be able to get a benefit, the tax benefit of expense or cost? Looks like you cannot also because they are not directly related to production. Okay. All right. Next. Okay, these are new provisions introduced by the BICAM. VAT and duty-free importation of COVID-19 vaccines makes sense. I'm just wondering why it's under the incentives provision. This should have been placed in the first portion, okay, in other taxes. Why under the incentives provision of create? Okay, and then exemption from duties and taxes upon importation of crude oil intended to be refined at local refinery. This is also a new provision introduced by the BICAM. Okay. Next slide, please. Persons who directly import petroleum products for resale to customers for resale to customs territory or free port zone shall be subject to duties and taxes. Okay. Number 5, importation of petroleum products into customs territory or free port zones by RBEs shall not be exempt from duties and taxes. Okay, but subject to claim for refund for direct and indirect export of petroleum products. Okay, I think, and I'll tell you now, I'll be frank about this. The Bureau of Internal Revenue has to clarify this when they come out with the implementing rules. When can you file a claim for refund? Because it is qualified by the phrase for direct and indirect export of the petroleum product. Okay, so meaning if your imported petroleum product is, let's say, is for power consumption, okay, would you be able to file a claim for refund? Because that's not, would that be considered as indirect export, or so they have to clarify this in detail. Okay, next slide, please. If you look at the Senate version regarding performance commitments of the RBEs, it says RBEs whose performance commitments include job creation shall maintain employment levels to the extent practicable. Okay. If you look at the BICAM version, it is specifically stated that in case the performance commitment for job generation is not met, then you have to justify it before the IPA and the FIRB. Okay, so that's the development done by the BICAM. You have to justify why you are not able to meet your employment commitments. Okay, very important. This is both present in the Senate version and the BICAM version, but I will just highlight that those statements, phrases that are highlighted in yellow, next slide please, okay, are they were introduced by the BICAM. Okay, so if you look at the tier 1, tier 2, tier 3, that's already in the Senate version. And these are actually the enumeration of industry prioritization. Okay, so this will determine the length of your incentive. Which industry do you belong to? Okay, so the determination of what kind of incentive you will enjoy and how long you will enjoy the incentive will be a function, same with the Senate version, will be a function of your industry classification, whether tier 1, tier 2, tier 3, and location. So it's a function of industry uh, uh, tier and location. Okay. So please look at these tiers, okay, and you will just quickly notice that those activities, most of the activities under tier 1, okay, agriculture, fishing, forestry, agribusiness, the moment they employ high technology, they will be classified under tier 3. Okay, next slide please. So see, agriculture, fishing, forestry, they just repeated those industries that indispensably require employment of knowledge processing, modern science, data analytics, okay, engineering, state-of-the-art technologies. They will fall now under tier 3. Okay, so and the other industries. Okay, I'm not going to discuss them one by one anymore for uh, given the time. Okay, this is the Senate version in determining the length of time and the type of incentive that you will enjoy. Okay, so there were four classifications under the Senate version: basic, enhanced, advanced, superior. So parang laundry soap, no? Um, and the Senate, again, it's a function of industry classification and location. Okay, your ITH duration 4 to 7 years, and the SCIT or the Special Corporate Income Tax is 10 years across the board. Okay, so that was taken out by the BICAM, which I will show you later. So the total number of years within which you will be able to enjoy the incentives can still be between 14 to 17 years. Okay, but please take note that there is now a change in the BICAM version. Next slide, please. Okay, before I go to the BICAM version, this is the location classification at the in the Senate version. So there are four location classification in the Senate version: NCR and other metropolitan areas, areas contiguous to NCR or metropolitan areas, areas outside of NCR or outside of metropolitan areas, and less developed areas. So that determines whether you will be under enhanced, uh, you will be under basic, enhanced, superior, or advanced. Okay, plus your industry classification. So let's look at the BICAM version now. Okay, so BICAM version is simpler. Okay, still 14 to 17 years. Okay, depending on location and industry priority. Okay, but the ITH is only 4 to 7 years. SCIT can be will be 10 years. 10 years fixed, okay, for export enterprises, okay, and domestic enterprise that are critical, as will be defined, as will be determined by NEDA, okay. So domestic market enterprises that are considered critical and will be spelled out by NEDA, and export enterprises. So I think all of you belonging to this sector will enjoy definitely the full menu of incentives. Okay, meaning ITH, SCIT, or enhanced deduction, and the SCIT will be 10 years for because you most of you are exporters, no? Okay, next slide, please. Okay, so for exporters and critical domestic market enterprises, if you will be located in the NCR, if you will be located in metropolitan areas or contiguous and adjacent to NCR, and all other areas, okay? So three location classification only. This will be the length of your incentives. Okay, so if you will locate in NCR, you're falling under tier 1, you will have 4 years of ITH plus 10 years of SCIT or enhanced deduction at your option. Okay, if you are under tier 2, you will locate in NCR, 5 years of ITH plus 10 years of SCIT or enhanced deduction. If you are in tier 3, 6 years of ITH plus 10 years of SCIT or enhanced deduction. So the further you are from NCR or metropolitan areas, so much the better, because you are already guaranteed of longer years of your incentives. Okay, at least minimum 6 years of ITH, even if you belong to tier 1, but you are going to locate in all other areas outside of Metro Manila and outside of the metropolitan areas or areas adjacent to NCR, you will already be assured of 6 years of ITH at least, okay, and still have 10 years of SCIT or enhanced deduction. Okay. Of course, if you belong to the tier 3, then you have longer ITH, 7 years of ITH plus 10 years SCIT or enhanced deduction. Okay. Next slide, please. Now, if you are a DME, okay, domestic market enterprise, that's not critical, but at least you have 500 million of capital investment. Okay, you will still have the option of having the SCIT or having the enhanced deduction. But note that for non-critical DMEs with 500 million capital, their SCIT is only 5 years, shorter, so not 10 years. So depending on where they will locate and their industry classification, this is going to be the incentive and length of incentive that they will enjoy. Again, the farther you are from Manila or NCR, then the longer your incentives will be. Okay. Okay, these are new provisions added by the BICAM. So for projects or activities, who will locate in areas that are recovering from armed conflict or major disaster, 2 years of additional ITH. So on top of, let's say, if you will qualify for 4 years or 7 years, you will still have additional 2 years of ITH if you will locate in that area. Okay, and just to encourage the clogging of NCR, okay, if you will completely relocate from NCR, you will be given 3 additional years of ITH. Okay, so whether you are a new registrant under Create or you are an existing RBE, okay, the moment you relocate, they will give you 3 years additional ITH, and that will start from the completion of your relocation. Okay, I hope it's clear. All right. Let's look at this example. Okay, just to highlight the difference between the Senate version and the BICAM version. So, to give you an illustration under the Senate version, if, for example, Company A is an export enterprise engaged in Tier 1 activity, but is located in NCR, then Company A will fall under Category A. So, under the Senate version, this is going to be their incentive, 4 years of ITH plus 10 years of 5% SCIT, or they may opt for 14 years of enhanced deduction right away. Okay, so that was available in the Senate version. So that option was taken out by the BICAM version. Okay, so meaning, next slide please. Same facts, no? Company A is an export enterprise engaged in Tier 1 activity and located in NCR. Now, its two options are this. 4 years ITH plus 10 years of 5% SCIT, okay? Plus, or 4 years of ITH plus 10 years of enhanced deduction. Meaning, there is no more option for the registrant to go directly to enhanced deduction. So you might ask the question, why would I opt for an enhanced deduction directly for 14 years when it's better to have at least 4 years of ITH? Okay. In some jurisdictions, they do wealth planning, okay. They do corporate tax planning, okay. So they might need, foreign tax credit. Okay, so just to be able to utilize that foreign tax credit, they'd rather be subjected to regular corporate income tax because they can use it anyway. So looking at the overall profitability of the, let's say, a multinational company, they'd rather opt for to be subjected to corporate income tax in other jurisdictions. So that's why there is that factor. Okay. All right. All right. Regarding transitory provision, okay, Section 311, the BICAM maintained this version. It just added a phrase which I think will not really that critical. Okay, so it's now like this, no, granted with those granted with ITH, meaning existing RBEs who were given ITH. They will be able to finish the ITH. Okay, but upon the lapse of their ITH, they will now be subjected to regular corporate income tax of 25% or 20%, as the case may be. Because we said that if your taxable income is less than 5 million, okay, and your total asset is not more than 100 million, then you will be entitled to the lower corporate income tax rate of 20%. Okay, so it can be 20% or 25%. And for existing enterprises who were given ITH and 5% gross income tax under the current rules, okay, they will be able to finish the ITH and then they will still be able to enjoy that 5% for 10 years. Okay, and then after that, you will already be subject to regular corporate income tax unless you opt to reapply under create and you pass, of course, the application process. Of course, you have to remember the FIRB will still set the parameters, the performance metrics, the criteria, and SIPP will also set the criteria. So for as long as you are within the SIPP, your activities within the SIPP, then you can reapply. Okay, and it says that when you reapply, your incentive will be 5% SCIT. Okay, so we were proposing, okay, to entitle reapplication to ITH as well. Unfortunately, that didn't go in. Okay, so the BICAM didn't listen to our proposal. So it's like, in a sense, grandfathering of that 5% incentives under the current rules. No, so I mean it's still a very good development as far as I'm concerned, because for a while we were worried that for existing RBEs, the incentives will be completely gone. So I distinctly remember Secretary Carl Chua, Congressman Salceda, Senator Pio Cayetano were always saying that you can reapply, but there's no explicit provision when all these proposals started until it became create. So at least it was already spelled out clearly that existing RBEs can apply. Okay, so what will happen now for new registrants under create? Will they be able to reapply? It looks like they cannot, because this Section 311 is very explicit that it only applies to export enterprises registered prior to create. Okay. So if you ask me, should they be? Of course, my answer is yes, because I think that's the spirit of the law, and that's what our lawmakers have been saying all this time, that you can reapply. Um, so that has to be clarified as well. But looks like from the wording of these transitory provisions, new registrants will not be able to reapply. All right, next slide, please. Okay, this is an example or an illustration. So for the first, granted with ITH and 5% GIT. So if company A is an existing PEZA enterprise and currently availing of the 5%, okay, assuming that the transitory provision will be effective January 1, 2021, then company A will be able to enjoy that 5% for the next 10 years up to December 31, 2030. Okay. And it can reapply and avail of the 5% SEIT for 10 years. And Section 311 says that 10 years can still be extended for a period not exceeding 10 years. Okay. So subject to the conditions and qualifications to be set in the SIPP. Okay, this is provision already introduced under create bill. Even in the Senate version, it's already there. It's not introduced by the BICAM. Okay, the power of the president to be able to approve a better menu of incentives for highly desirable and strategic investments. Okay, um, the reason why there is this provision is because we are losing from other jurisdictions in terms of attracting uh, mega investments. If you recall, there is this industrial complex that was built by Samsung north of Ho Chi Minh. Okay, that was given 30 years of income tax holiday. And even during the construction itself of that industrial complex, it already employed 10,000 construction workers. So imagine the level of employment that it was able to generate and the amount of investment that went into that industrial complex. We lost because we do not have 30 years of income tax holiday. Okay, so just to at least have that balancing opportunity, President under Create is given the power to grant a higher fiscal incentive, but it's already spelled out that the ITH cannot be more than 8 years, okay, but the 5% SEIT can be for the balance of the next 40 years. So at least 32 years of 5% SEIT. So improvement, okay. The requirement for the president to be able to do that, the capital investment must be at least 50 billion pesos, or must be able to employ at least 10,000 employees within the first 3 years of its operation. Okay, but the registration can be canceled if they are not able to meet that investment commitment. Okay, next slide, please. Okay, qualification of an RBE under Create, so that you will be able and you will be entitled to incentives. Of course, you have to engage in a project or activity that's included in the SIPP. You have to be able to meet the target performance metrics after the agreed time period. Employ a computerized accounting system. Okay, that's already a requirement under the current rules. Also a requirement under the current rules, you must be able to employ e-receipting or e-sales report, okay, and submit annual reports of the beneficial ownership of the organization and related parties. Okay, next slide, please. Okay, the Secretary of Finance, upon the recommendation of the Commissioner of Internal Revenue, would have to promulgate the rules of Create, the revenue regulation, within 90 days from its effectivity. But Congress already inserted this provision that even if they fail to do that within 90 days, it shall not prevent the implementation of this act upon its effectivity. Okay, next slide, please. So what I would suggest for you to consider in the next coming days, once this Create bill is signed by the president and becomes a law, okay, and as early as now, I would suggest that you do this already. Identify the strategic location and align it with your logistics and supply chain. Okay. And consider the priority industries that will maximize incentives. Okay. So that you will be able and to analyze and study how you will be able to optimize the tax incentives under create bill. Okay. So as early as now, you have to make do pencil pushing already, make a computation where in what kind of menu or set of incentives you will be able to maximize the benefit. Okay. So I think that's my last slide. I would welcome any question, and I'll try to answer them as best as I can. Thank you.
Thank you so much, Jules. That
You're welcome.
very comprehensive discussion and very interesting. I I'm sure a lot of our attendees here can't wait to ask their questions, no. So, but first, before we start the panel discussion, I'd like to welcome our guest panelists, two very distinguished friends. First, I'd like to introduce the Senior Vice President for Internal Communications and External Affairs of SPI Global. She's also a director of the PAMURI, the Association for ROHQs, which is which was really impacted during Train 1. And she's also, of course, running for re-election, an incumbent board trustee of the IT-BPM Association of the Philippines. I'd like to introduce a very good friend, Miss Celeste Ilagan. And we also have the Executive Director for External Affairs and Investor Relations of IBPAP, a very passionate advocate who's constantly on the lookout for any threats, risks for the IT-BPM industry. Friends, I'd like to introduce Mr. Attorney Ricky Salvador.
Thank you, Jenny.
Okay, okay, great. I can see you now, Ricky. Okay. So first, before we start with the questions, I'd like to invite Celeste and Ricky to share their thoughts on the newly approved BICAM version of CREATE. Celeste, how do you think will this impact specifically ROHQs, no? Considering that during Train 1, it was the ROHQs were already impacted. And how do you think will this be beneficial to our industry?
Okay. So thank you, Jenny, for the generous introduction. And I thank HIMAP for the invitation. It's been a few months since the last time we were also in a similar event, and it's always good to be part of a HIMAP event. There's always a lot to learn from speakers and other guests. So, Jenny, maybe just before I go to ROHQ specifically, so Jules presented the whole CREATE in terms of incentives, and I guess for most of us, it's not enough to listen to it once or read it a few times to absorb everything that it offers. So maybe just for us, most of us are existing registered enterprises of PEZA. We can for now focus on having been given, a 10 years sunset for the GIE. And I think that is already a very positive development based on where we came from. Si Jules narrated the journey, and to some of us, it was painful going through all of those milestones, and getting 10-year sunset was not easy to get, but we got it. So we thank the BICAM and of course the Senate for putting that together, and then for the BICAM to have agreed. Also, another maybe general feature of CREATE that as Filipinos we should remember is that CREATE is in two parts, right? So one is for the corporate income tax, and many probably will ask, what's the difference? Why is there the 25%? Why the 20% for SMEs? But I think the more important information to remember is that this corporate income tax is for the general business population, so to speak. The rationalization of incentives will be for those registered with PEZA, BOI, or other IPAs. So for the general business people who will locate in the Philippines, or the domestic, local investors who put in money and do business, then they pay the 25%. They will pay 25% tax on gross income, which is a significant reduction from the 30%. But if we look at competitiveness of the Philippines versus other countries, the 25% CIT is in the high side. So, it is a significant reduction, but still on the high side. Hopefully, there will be initiatives later on to further reduce that. The CREATE did not sort of agree to the downward reduction to 20% for large enterprises. But right away, they gave 20% to SME. So those are very positive developments. So what's the negative? And you mentioned ROHQs. So for ROHQ, the journey has been, painful, and it's even more painful now because when the first version of CITIRA came out, we were supposed to get a 2-year sunset period. From our 10% corporate income tax, it will be to the normal corporate income tax. And then the Senate version proposed 1-year sunset. So it's supposed to be ending the 10% corporate income tax of ROHQs will end in December this year. So for ROHQs, our corporate income tax will be 25% by January 2022. And I guess, for investors that have located in the Philippines, banking on a law that they used in deciding to come into the Philippines, that is, a development that is quite difficult to swallow, but it's already there unless it changes when the president signs it. But we'll wait for that. But so far it's a huge impact, and we are not really sure how our principals will look at it. But it is certain that doing business in the Philippines for these ROHQs will be a lot more costly than how they have planned things out. So therefore, the possible effects are varied, and to some they might opt to continue locating in the Philippines and then take advantage of what CREATE now offers in terms of a possibility for ROHQs to register under SIPP. But of course, that entails certain work in terms of maybe restructuring your enterprise, making sure that you are in the right side of the law in terms of how you do business, coming from an ROHQ perspective to a regular BOI or PEZA registered company, for example. And therefore, for ROHQs, my personal view is that the country is not as attractive a location for future ROHQs who probably have long-term plans for Philippines already, for those existing. Because we know that ROHQs, they start, a few hundreds, but many of them are now employing in the thousands in the country, considering the fairly good environment that we offered them. But because of the change in Create, it might change. And so I think that will, time will tell how our ROHQs will respond. But judging from the Train 1 effects, a number of ROHQs have closed down when the preferential tax rate for their employees have been removed by Train 1. And of course, this is another difficult development. And hopefully, we're able to go through this in a manner where government will help us navigate through a better transition. So maybe I'll stop there for now, Jen.
Thank you so much, Celeste. Okay. So at least we're still hopeful, right? For ROHQs, there's still a light at the end of the tunnel. And I guess yes. And I think this version at least is much improved from the previous ones that we were working on before, diba, Jules, and then the and company. So this one I think this one is more attractive compared to the previous ones from from the previous years, from way back. Definitely, diba? Especially during the start of the administration. And Ricky, from your point of view, I'm sure you've received a lot of queries, a lot of expressions of concern from member companies, no? So what do you think of this BICAM approved version, and what have you been hearing from our member companies?
Hi, Jenny. So first of all, thank you for the opportunity again. Thank you for inviting me. So I'll go straight to the point. I think this is a welcome development. I think the real objective really is to catch, like what Jules was mentioning, no? Catch those investors who are looking at our country and we're waiting for almost a decade, no, for a Create bill to be passed. So now that the BICAM version is passed, it's a big relief, no. And I think the work it really is to attract investors to the Philippines with whatever was passed by the Senate and the BICAM. And if I should say, it's really I think they were aware that they had to simplify, no, and make it as attractive as possible without how should I say it? Parang without rocking the tails of DOF, di ba? Because we know that DOF was really trying to push for certain amendments, no, to the bill, and fortunately, the senators who were more rational, no, prevailed, no. In the end, we have a Create which I hope will attract investors because really it's the predictability. Now we have that and the ability to plan, as Jules highlighted in his towards the end of his presentation. Now we can concentrate on where to put those investments, where to set up, and what to do. No, so I think that's the benefit really of Create.
Right. Thank you so much for that, Ricky. So when so registrants, participants in this forum actually sent a few questions when they registered, no, and I noticed that at least 5 questions were focused more on the potential impact of Create on IT-BPM, on the IT-BPM sector, on PEZA registered entities. So from your point of view, so I'll go with Jules first. Jules, how do you see this version, the BICAM approved version, impacting registered business enterprises, specifically those registered with PEZA or the foreign investors?
Well, for one, from a bigger picture, the uncertainty is gone, as Ricky has said. And that's a very good point. For the existing ones, nothing to do anymore, right? Because you will continue to enjoy your SCI, your 5%,
5%.
for at least the next 10 years. If you still have an unexpired ITH, that will still be there. Then
Right,
plus
right.
5% for 10 years, right? So at least
But no extension for ITH anymore, right?
There's none, but for expansion,
Mm.
it would still be there. Okay.
Mhm. Mhm.
Before under trabajo, okay, expansion was only entitled to very few incentives.
Right,
So
right.
there's really a very good development when create happened regarding expansion, because it
Mhm.
will still be, I mean, it still be the same set of incentives, except that it will expire, but you know.
Mhm. Mhm. Right, right. What about you, Ricky? How do you see this impacting our sector specifically? Do you
Well,
think we'll get more IT-BPM companies interested in the Philippines? Or?
I think definitely no. In fact, it's starting. In the past couple of months, we've gotten a lot of inquiries from different countries, and I was sharing this to the membership committee earlier. We've gotten inquiries even from China, no, and Denmark, no. They're looking again at the Philippines, and even European countries are trying to have some savings, no, and are exploring outsourcing again, no. So really, it is a positive development. I think the timing, we wanted this to be out last year, but it's a good thing that this came out early this year. So let's
Mm.
use all of these tools, no, at our disposal to attract investment. So I'm going to go towards that na, no, really
Mm.
trying to target, and I'm working together with the embassies, no, and our foreign trade service core
Right.
in trying to identify those pockets of opportunities. No, I was talking to our FTSCs from China yesterday, and I was in talks with the US, and we're trying to really map out these pockets of opportunities. And I'm always glad, no, to tell them that in terms of incentives, we have the Create Bill now, and you can look at
Mm.
it and compare it, no, and see if the Philippines, no. Of course, our main selling point is our talent, right? And that's very true for HIMAP, no. And now we have the incentive, so san ka pa? Pilipinas na.
Right. Oh, very nice ano ha? Very nice tagline. Saka pa, Pilipinas na. Nice. So
Yeah.
Leslie, I remember before, um, you issued a controversial statement during the European Chamber of Commerce, I think ECCP or a foreign chamber event,
Right.
where you actually said that we don't have any agency backing us in this fight, and it actually caused some uh, some ruffled feathers at the DTI. So, what do you think this time around? Do you think the DTI actually had a stronger voice and was able to champion our cause,
Uh,
considering this current version?
I know, Jenny, that even from the start, the DTI and the BOI have been partners with the DOF in trying to come up with a package of incentives that will be attractive for new investors, and also make sure that the existing investors are not negatively affected. Except that, the OF and the DTI have different mandates. I think that's
Mm,
where
right.
uh, not the confusion, but in terms of focus, they have, different objectives, and therefore, if another agency has more visibility, that's all we see, di ba? But
Mm,
in this last several months that we're trying to work with the Senate on create. DTI was certainly always there, easy to get to talk to.
Mhm.
You're able to submit your positions, and they listen to us all the time. So I have really no complaints. And if I go back to your earlier question about impact, I look at Create also very positively now, not only because it has ended the uncertainty and will allow us all to move forward with a clearer mind and probably able to plan better for the future. So existing investors have been taken care of in terms of the 10 years sunset. I think that is as generous as it can get, and there's a window for them to register. Existing enterprises are future investors still in different areas. We know that. And for new investors, I think how I look at it is the incentives, really the type of incentives did not change. It's still income tax holiday. There's the capital equipment importation, except that we don't have the perpetuity angle for the 5% GIE before. And I think that's acceptable to new investors as long as coming in, they know that that is their limit. In the past regime, we sort of marketed the perpetuity of 5% tax on gross, and then if it's withdrawn, it creates certain discussions. But for new investors, this is very clear. Then I think we can only try to take advantage of this new set as early as possible. And as Ricky said, be ready with marketing and promoting the Philippines, to the world as the top BPO destination. Saan ka pa? Sa Pilipinas.
Right. Nice. Okay. So I have a question here on I remember that there was a provision in the BICAM approved version on location of the eco zone. So Jules, is this location specific? The incentives is very location specific.
Location is specific in the sense that that will determine the length of your incentives, where you will locate. But if you're talking about being located within the zone or outside the zone, there's no distinction anymore. Okay. So it's now based on geographical location. The farther you are from the major areas, metropolis, NCR, the longer your incentives will be.
Right, right.
It's not anymore whether
But
you're in or
considering that a lot of us are still doing work from home or telecommuting right now.
Okay.
So if you're like if you continue doing work from home and you're a PESA registered entity, do you think that will have an impact?
I'm looking at that provision, latter part of Create, specifically yung Section 309. Okay. I would suppose, because it's not reasonable to expect that you can go back to normal right away. And until the vaccines are fully rolled out and there are no more infections anymore. So I don't think that's a reasonable expectation. Frankly, I think they're sensible enough to realize that that's not doable, let's say in the next year or two. So if this becomes a law, I mean, I don't think there will be a strict implementation of that provision in the next year or two, because that's just impossible.
I see, but so there was also a mention of contiguous area for vertical eco zones. So for in our case, IT-BPM companies, many of us occupy vertical eco zones. And it has to, so now in the BICAM approved version, it has to comply with the contiguous area required of PEZA eco zones. Will this is there a danger of some of these vertical eco zones having their incentives removed or
AI, Jen? Sorry.
please go ahead, Celeste.
Go ahead, Celeste. Go ahead.
You know that eco zones really in the past are these huge tracts of land, no, for PEZA. And when we started, looking at the BPO industry as an investment area, there was a need to reassess if really that kind of concept of an eco zone would be needed, and therefore the vertical eco zones have been have proliferated. And at that time, as long as there's 5,000 square meters of that building dedicated to the ecozone intent, I guess is how I should say it. Then it's eligible. So now I don't know the size of contiguous that this create is looking for. I guess we as an industry should try to have a definition because buildings have floor plates. It cannot be, really wide depending on design. So as an industry, we have an interest to have a definition that will retain the country's attractiveness as a location, because we have many of these vertical construction or locations available to locators. So Jules, now you. Sorry.
I have a short answer. I don't think it will affect the existing policy with respect to that. No, I think there's no sense to think otherwise. It's not making sense to me from an implementation perspective.
Right.
So I think it will stay. I think it will stay.
Right. Another question that's been I've been hearing a lot of. There are several mentions of employment commitments.
Mhm.
We know that IT-BPM companies employ a lot of people. So we're actually the biggest employer in the private sector employer in the Philippines. I'll shoot this to Ricky first. So Ricky, do you think having this 10,000 employee requirement for 3 years upon when we avail of the incentives, do you think a lot of our member companies or a lot of IT-BPM companies will be impacted with this, or is there a risk of having incentives taken away once their commitment, they're not able to deliver on their commitment, especially given the situation right now?
Again, it's really it really depends on the performance, and as we've been tracking it, we see growth also in the sector. So for me, I'm always very optimistic, and I have to be optimistic when when we talk to investors, right? Because these are the guys who will invest in the country. So really, let's just look at the positive side, because unless we've gone through the worst, and there's no way to go out but up. Diba? So that is my view on this, no. We've hit rock bottom, and the only way is up. So.
Okay. So any other inputs with regards to that employment commitment?
Well, we just have to be conscious of that provision. that once you are given the employment commitment and you agreed to it, you have to be conscious to meet it, because the wording of the bill now is that you have to justify before the IPA and the FIRB why you're not able to meet it. You may be able to justify it because of some unforeseen events, right? Force majeure, but there's that process that you have to justify it.
Right, right. So I received a question here from Pia. Since locating in eco zones will no longer be relevant, as mentioned, what will now be the advantage of PEZA compared to other IPAs?
Very,
Yeah, good
uh,
question.
um, I don't see at this point, and it's one of the implications that I'm still grappling with. Uh, Except, okay, the only distinct advantage now that I can see, and I'm sure of, is that if you are a PESA registered enterprise and you're doing conducting it through a Philippine branch, you will still enjoy that incentive from exemption from branch profit remittance tax. Meaning any profit that you remit to your head office will still be subject to Philippine tax, okay, BPRT in specifically, still exempt. Whereas if you are not PESA registered, you won't have that benefit. Okay, I'm specifically, and I'm emphasizing that it only applies to Philippine branches who are PESA registered.
Jenny,
Okay.
I'd also like to
Yes,
add, no,
Ricky.
oh, I think one implication also is dun sa in the definition of export enterprise, right? For you to be considered an export enterprise, you have to be uh, incorporated in the Philippine entity, and number two, registered with an IPA. So I guess that it's a prerequisite, is how I look at it. So there is if you are it is considered a condition precedent for you to be considered muna as an export enterprise, di ba? So that goes into the definition. And since create has given um, has really simplified, no, the availment of the incentive for export enterprises, you just have to fulfill that basic condition of being Filipino, a Filipino enterprise, and then registering with the IPA.
Right, right. Yes, Celeste, go ahead.
Yeah, additional insight there. I think the one who asked a question is now comparing between a BOI registration and a PESA registration. A PESA registration will sort of presuppose that you will locate in an eco zone. So what's the of incentives? There's none because the set is the same.
Okay.
But when I was at the BOI, when you face an investor, you explain the benefits of both. If you choose to be in an eco zone, that is an enclosed development with all of the nicest facilities that can be offered, so that they will be attractive. There's in terms of power, in terms of the minimums, or not minimums, in terms of the best that can be offered, and the eco zones compete also amongst each other. Another advantage, I guess, is that in terms of dealing directly with the outside world, a PESA registration gives you certain benefits as well, because PESA is still there to sort of be your one-stop shop. So, in terms of incentives, there's not going to be, but in terms of maybe ease of doing business, being able to deal with the external LGU better, and also I think, and this is also one of the investors look at, is in terms of cost. A facility that is located I'll say maybe along the highway of Parañaque will be differently cost compared to one that is, that has all the bells and whistles of a location. So I think that explains it, Jen.
Yeah, and following Celeste's point, in terms of importation, okay,
Yeah.
because eco zones are fenced area, okay. I think their importation with respect to the requirements for their importation would still, and the processing would still be easier
Yeah.
because they are in a controlled environment. Whereas those outside, from an implementation perspective, that's going to be difficult. Na they're not enclosed.
Yeah.
There's no control.
Right, right.
So that's going to be difficult.
It's a good point, Jules. And actually, we've been getting a lot of assistance, no support
Right.
from PEZA as an IPA, and for which we're very thankful. Actually. And you mentioned importation. There's a provision on customs duty exemption. Is there a time limit for this? A period of availment? Like, is it only for? I remember before there was like a 5-year period or something.
I think well, logical to assume that it will coincide with with the length of your
Fulfillment
incentive.
of incentive.
Yes.
Okay, right. So if 10 years you're availing of the SCIT for 10 years, 10 the duty exemption will also be for 10.
Mhm. Yes.
Okay, right, right. Okay, so another question from one of our participants. We heard so much about income tax impact to PEZA or registered entities with special registration of rate. But how about the zero rating incentives that they are currently enjoying? Zero rated. VAT zero rating? Maybe he meant VAT zero rating?
Okay. Under create, the wording used is VAT exemption. Okay. So on local importation and local purchases. Okay.
Right, right.
And I will emphasize that they have to be directly
Directly
related
related.
to the registered activity to enjoy that VAT exemption.
Right, right.
So not directly related, subject to VAT.
Right. Correct, correct. So, because previously I've heard companies saying that by 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 technically, uh, eco zones are outside customs territory. So anything that that happens inside should be, VAT exempt. So that will not happen now.
It's a good question. Okay. But I would consider create as, of course, a later expression of congressional intent, right? And that's already very clear. Uh, so I
Very
cannot think
specific.
of another interpretation. The
Right, right,
provision is
right.
already clear.
Right, right. And we know that the SIPP, so NEDA will have a very direct hand in the crafting of the SIPP. Will you guys also be working with NEDA and the BOI on this? I know that we were all expecting that BOI will be the one mainly drafting this, but NEDA was mentioned several times. So, what are your plans in terms of working? I wouldn't use the term lobbying, trying to influence the SIPP as it is. I'm sure they now have a draft.
Who's going to answer?
Maybe I'll start, Jen.
Go
Sure.
ahead, Celeste.
Yes, that's one of the things that I immediately asked BOI about because there's that specific mention of NEDA in identifying the critical.
Right.
But I really didn't doubt also that the BOI will be involved as they have done the IPP for years now. And, in terms of procedural, probably they'd be able to sort of navigate the input that NEDA can give to them is really the identification of the industries. It's an activity altogether, being able to make sure that the industries that the country needs for development are included in the IPP. and therefore NEDA and DTI DOI working together is better for the SIPP. So in terms of the question, if we're going to work with them or try to influence, BOI has not said that you direct your attention to NEDA because we're not involved anymore. Continue to work with them. USEC FITA is very openly asking for help in terms of definitions of
Right,
how
the language.
should the language that should be put in the SIPP. So I don't think it will have a negative impact on us with NEDA having been mentioned in Create.
Right. I know Ricky will have to work actively.
Well, it's already outlined in the Create bill, in the Create
Right,
law,
right.
no?
Uh-huh. Uh-huh. Right. And there is a provision. I guess this is sort of encouraging for us, and I think we need to be uh, thankful to the House of Representatives for actually including a clause saying that the Create Bill is subject to the provisions of the Create Bill will be subject to review every 3 years for possible adverse impact to investors.
Right.
Yeah. So how do you feel about that? I felt sort of encouraged when I saw that.
I think it's a realization, Jen, that it's very dynamic, no? Who would have thought that we would be in this situation where the stringent trabajo and sitira would change into the version that we currently have now. So I
Mm-hmm.
guess having a provision there for a 3-year review is just a realization of, yeah, things change, and di ba, in one swoop, the conditions can change. So
Mm.
definitely a review provision is very much welcome.
Right, right. And I guess uh, the IRR, since it's being drafted by the FIRB, let's just keep our fingers crossed that they won't interpret things differently for the implementing guidelines, right? Jules, are you actually in any way working with the DOF? Or
Uh, I'm sure we will be asked what we think about it, no? And I have the same prayer, Jen, that they have to consider the situation and the fact that the Philippines is playing catch up. Okay.
right.
So the rules should not be interpreted strictly. If at all we have to be able to bend backwards for the investors to help them, okay, in terms of ease of doing business, accommodating them, treat them as
Right,
customers,
right.
okay, as partners in national development. I think that's the way we should look into this.
Right, right. Especially given that we're in the middle of a pandemic and we
Yes,
have millions of Filipinos jobless,
right.
unemployed, right? Right.
Exactly.
So with that, thank you, friends, Jules, Celeste, and Ricky, for joining us today. Thank you so much for your inputs. Very enlightening, very encouraging, considering the way the version has changed over the few years that we've been working with our lawmakers on that. And we've actually run over time. With that, I'd like to introduce a very special lady, a new member of the board of trustees of HIMAP, and of course, the managing director of Optum Global Solutions, my boss, Miss Ivy Mueco. Ivy.
She's on mute.
Sorry, I'm on mute. First of all, thank you very much. I know we're over time. Thank you very much, Jenny, for facilitating such a rich and colorful, to a certain extent, conversation. Attorney Jules for patiently walking us through this version. I know there's a lot of things that we have to work through as we completely understand the impacts of this to our business. But we're very hopeful. We're very positive. I think when you look at the healthcare market, there's so much development and there's so much growth that can be that we can have if we position the Philippines in a very strong way. And I'm very hopeful. So thank you very much to all the members. Celeste, thank you very much. I know you're running for the board. It's all over Jenny's background. So happy to support, right? Given, you know, sorry, didn't mean to do electioneering, Ricky. But anyway, thank you very much, everyone, for participating. But more importantly, thank you very much, Bachi and Kathy. And to the members of HIMAP, your board is working really hard to support you as we navigate this new working environment, as we, you know, face the challenges and some of, you know, just where we go in terms of vaccine or working conditions, and now the tax reform package through, you know, under the leadership of Jeff and Roger and the able guidance of Ben Coronel. So happy to be working with all of you. There's more to come, you know, as we work with you in our industry. It's a growing sector. I'm very hopeful. I'm very positive. But this is such a great kickoff for the year, and proud that, you know, HIMAP is starting this. I'm sure a lot of the other associations will work through their members in working through their this tax reform. So thank you very much, everyone. Don't forget Celeste.
Okay.
Thank you, Ivy.
Thanks, Jenny. Great conversation, guys. Thank you. Thanks,
Thank
Attorney
you.
Jules and
Thank
Ricky.
you.
Thank you.
Thank you.
Thank you. Thank you to all our participants and of course the HIMAP board.
Thank you for having
Have
me.
a good day, everyone. Thanks, Jules.
Thank
Bye.
you.
Thank you, everyone. Thank you, Attorney
Thank you,
Jules, Ricky,
everyone.
Jen,
Bye.
and
Welcome.
Thank
Bye-bye.
you.
thank you.